Okay guys, so this video will be based on how to draw your trend lines. So you never want to draw trend lines on your monthly, your weekly, but you will however draw trend lines on the daily and the 4 hour. Okay, let me just clear up some stuff here. Okay, so when you draw a trend line, so let's draw one quickly on the daily over here. Your point one needs to either be a low if you're drawing it, if it's a bearish trend line and you're drawing an ascending trend line, you will draw it on the low. And if the trend line was descending, that would mean bearish. Sorry, so if it's bullish, you will start from the bottom. If it's bearish, you start from the top. So right now, you could actually draw a trend line like this, point one and then point two. Make sure you draw it from week to week and you extend it into the future like this. So if you can see that, point one to point two, okay? Point two needs to be where price moved away from. Okay, so if there was just a week there but price was going sideways, it wouldn't be a valid point two. So as you can see here, we have two bearish candles. The price is definitely bearish, so this is a valid point two. So let me just highlight the wicks for you, just so that you can apply this while you're watching this video as well. So point one, point two, delete this. Okay, and then if you draw it from the bottom, you would then draw your ascending trend line like this from the week, point one, point two, and extend it into the future. Okay, so now point two is also valid because price moved away from it. Price was not in consolidation, but it actually moved upwards. Okay, so let me highlight this again. So highlight that, it's the low, we highlight this. So now, what trend are we actually in? Are we bearish or are we bullish? Let's put on the EMAs and let's see what trend we are currently in. So you can see that the market has flipped over. It went from bullish and it changed over there, it went bearish, and then it switched over here again and went bullish. And now the EMAs are moving closer together again. Now, what is awesome about these key levels that we're looking at is the fact that we know that if price should come down and bounce off here, we could place a buy, right? Which I will show you later on how to place the buy using fibs. But just for now, I want you guys to take notes of this. Please write this following sentence down. Okay. When drawing your trend lines from point one to point two, we always, and when I say always, we always wait for the third bounce, because when the market approaches the trend line for the third time, one of two things is going to happen. It's either going to bounce and give you a candlestick pattern to show that you need to buy or sell, and then you will ride out into profit. Or if it doesn't bounce, it will actually break the trend line and then it will retest the trend line as support. So let's just say the market came down over here. Let me throw an example. So here's the market, and now it comes up and it breaks. Instead of bouncing, it breaks it, which was resistance. It then comes down, it then tests the trend line for support, and then boom, shoots up just like that. So you'll get a break, a retest, and then long. So let's just say it didn't break and it actually gave you a signal to sell. It would then bounce off here with a candlestick pattern, maybe let's say a bullish, a bearish engulfing, and then you'll ride it down. Guys, you can go back, you can back test the charts. You will see that when you're drawing your trend lines, right, the third bounce is so crucial. Let me actually go find an example just so I can show you how crazy the third bounce and the break and retest all works. So in case you didn't take notes, again, I'm going to say it. When you're drawing your trend line from point one to point two, make sure you're drawing it from week to week. No interference, no candles in between them. Never draw them on the monthly and the weekly, only on the daily and the 4 hour. The higher the time frame, the more of a swing trade it is, okay? And it's also more guaranteed that it's going to go more in our favor. If you draw trend lines in the 1 hour, yes, they can work, but the 1 hour is very messy, so you won't always get a clean trade. And then when it approaches that trend line again for the third time, one of two things is going to happen. And I sound like a stuck recorder, but I need you guys to understand this. It's either going to bounce off the trend line or it's going to break the trend line. We then need to wait for it to retest. No matter how far it breaks, wait for the retest to happen on the trend line and then place your buy or your sell, depending on how it broke. Let's see if we can find a third bounce here. Here we go to the 4 hour. Okay, so here we go. Trend line. Here's point 1, point 2. And we're throwing it into the future. Let's delete this so you don't confuse yourself. Just want to show you how strong what I'm saying actually is. The third bounce, third break, it's powerful, guys. It's all I trade on. So over here, we have point 1. And then we have point 2 nice and comfortably on the monthly. And then look what happens when it comes over here for the third touch. However, it does not bounce. But what it does do, it breaks. It then retests this area and it then place your sell. Okay, we had some sideways movement, but eventually price did drop quite a bit. If we use our price range tool and you got in over here on the sell, you would have rode out easily 380, 390 pips. So that would have been a very, very good trade just using the trend line. One touch, two touch. Third touch was not a bounce, it was a break, retest, get short in over there and ride it out for 300 and odd pips. It's that simple, guys. Obviously, you're going to use the trend lines in conjunction with whatever else I'm going to teach in the other videos. But this is trend line application 101. See you in the next video.